Welcome back again. On this slide, I'm addressing the issue of simplified approach again, but now I'm dealing with example 2, which is addressing the issue of VAT, where we're saying what happens if the asset we're dealing with is for a non-qualifying purpose. Now, if that is basically the situation, you must firstly remember that this cash price, since you're a lessee, is irrelevant under simplified approach. There's nothing to do with it. We've specified that the asset is regarded as a low value asset. The lease term is 3 years, as stated. The monthly installment are these ones here. It's 1,000 for 24 months and 500 for 12 months. You've got your tax rate at 30, the VAT is 15%. The economic useful life of this crane, so that we become specific, is 10 years. Okay, the profit for all the years is 100,000. So you see the asset here, the lessee uses the asset for a non-qualifying purpose. So if that is the case, now, like I said before, always look at these, right? So there is no VAT here in terms of the question. It's a non-qualifying that you are supposed to claim. You cannot claim VAT in that case. So which means that all your figures that you are dealing with must be including VAT. They become just one figure. You cannot split the cost and the VAT. Cost and VAT must be shown in one figure, right? They're required in terms of this one, the same as the other exercise that we did. You must calculate the equalization list. Remember, the equalization list, we want one standard list amount per month, and then we extrapolate it to a year. And then we've got number 2 and number 3 as mentioned there. Now let's start with number 1 when we do the equalization list. Now you'll see here we are saying it's 24 times 1,000 times 1.15. So what we are saying, we're saying it's 1,000 rand for 24 months. Add the VAT also of that amount, because this one is non-qualifying. Okay, you'll see again here we're saying it's 12 times 500 times it's 12 times 500 times 1.15, so meaning adding the VAT in it, divided by 36 months, and that will give us 34,005 divided by 36. So it tells you that a month is 958.33 per month. Usually we don't use the 0.33s, but in this case I'm just demonstrating it the way it comes out. 958.33 per month. Therefore, for 12 months it is 11,500. That is the standard amount, right? And remember that in this case you are doing the equalization. Since it is non-qualifying, you must do it including VAT. You see, when it is qualifying, you do it excluding VAT. Right. So that is your number 1 in this case, where you've addressed the equalization here. You must remember that. Okay. Number 2, it's the tax pattern. Again, calculate current tax, deferred tax, and the deferred tax balance using the balance sheet approach method. Now let's then come to this one. It is 100,000 minus the standard, because it's an expense to the lessee. Right, then you go to temporary differences. Remember what I said initially, that the first thing that the receiver will do will cancel what you put in accounting, which is this 11.5. They will cancel it first. Right, and then they will say, after, how much is your actual low value asset lease expense? I mean, if you check here, the first year it's 12 here where there's 24. You say 12 times 1,000 times 1.15. It should give us this figure here of 13,000, because that is the amount that you're supposed to put there as an actual payment for that year, right? It's 13,800. Now the difference between 13,000 800, and 11,005 gives us 2,300. This one. This 2,300, because it's in bracket, it is taxable. It must create a liability, credit balance sheet, debit income statement, which is this one here, the 690 here. Okay. Right, and then 88 minus 2,300, it will give us the 86,200 here. Right, 86,200 times 30%, that will give us 25,860. Okay, so 2020 is the same as 2021 in terms of this exercise. So if you look at 2022, it's 100,000 again minus the standard, gives us 88,500. You reverse the 11 and you minus the actual. Now the actual in this in your last is 6,900 because it is 12 times 500 times, it's this one that I've highlighted. Okay, that will give you the 6.9. Okay, now the difference between the two is a positive amount of 4,600. That positive amount of 4,600, it is deductible. Deductible creates an asset, debit balance sheet, credit income statement, which is this one, right? Then 88.5 plus 4,006 will give you the 93,100 times 30% gives you the tax of 27,930. Okay, all right, we've calculated one part. Then we go to the balance sheet approach, which is this one now. For us again to demonstrate this balance sheet approach, I can even use this one or the other one, but let me go back to this one so that I don't overlap too much. Right, let's look at this thing. Your standard amount is this one. You are supposed to pay 11,500 according to accounting as a standard amount. But if you look at 2020, you've actually paid 13,500. Right. So there's a difference between what you've paid to what you were supposed to pay. You've overpaid by 2,003, right? And you will do the same the following year. And then the following year, which is 2022, you'll underpay, right? So here, this amount of 2,003, it is the difference between the actual payment of 13, this one, and the standard amount, right? And your standard amount of 11,500, for an example. So the following year, you'll see here we are saying 2.3 taxable. It must create a liability, this amount. Okay, then come next year, this one is 2.3 plus 2.3. You can see here it's 2.3 in 2020, 2.3 in 2021. If you add the two, they give you 4.6. Right, still taxable, must create a liability of 1380. In the balance sheet, the movement is 690. Right, come the last year, your standard is 11,500, but your actual is 6.9. Now here you've underpaid by 4,006. Right, that is the reason why you see by 2021 your prepayment is 4.6, but when you reverse it, it takes you to 0, and then the reversal as the movement is when you are cancelling the closing balance from last year. Okay, right, then we go to your journal entries as required here as number 3. Now, like I said before, year 2020 and 2021 is the same, so the journal entries will look the same. Right, now let's then interrogate this part here. You're going to pay your payment, because you'll pay 1,000 rand times 12 times 1.15, meaning including the VAT in it. That is your payment, the debit, the operating lease expense that you are paying. Right, then you come to the next part here. When you come to the next part here, let's deal with the tax. It's debit the current tax IS and taxable, sorry, taxation payable, meaning the liability, they come from these figures here. right? Okay, then your deferred tax is this one, and it is taxable. It must create a liability. So you'll see here you are creating the balance sheet, creating the liability, debiting the income statement, right? Now let's address this issue of prepaid expenses. Your standard is 11,500, but you've actually paid 13,800, so you've overpaid. So that will create a prepaid expense of that much, and you are reducing this operating lease. You'll see if I've got 13,800 and I want to take this 13,800 to a standard of 11,500, I must reduce it by 2,300. If I reduce this 13 by this 2,003, it takes me to 11,500, the standard. That's how sometimes I analyze this thing. Okay, then I go to the next part, which is 2022. The 2022, you're going to pay 500 times 12 times 1.15, which is including VAT, and that will give us an operating lease expense of 6,900. Okay, then once we have that operating expense of 6,900, some in some books, they, for an example, will describe this as a low value asset lease expense, like this. Okay, they will describe it like that, meaning it's an expansion of exactly what you are saying here, right? Let's just put it like this: low value asset lease expense, so we can try to be uniform to other people like this. Yeah, so we can be more relevant to that in any way. Yeah, it's fine. Now let's come here. We've already started talking about this one. We've paid 6,900, yes, here. But already now you see, if this one is 6.9 but the standard is 11.5, you need a debit. You need a debit to increase. You need another debit to increase it to 11.5. You see. Okay, let's now get back to this one. Your standard is 11.5, but you've actually paid this much. You've underpaid in this case. Okay, so you've underpaid by 4.6. 4.6 plus 6.9 will take you to 11,500. You're cancelling the prepaid expense as a credit balance, right? Then you've got your tax and a deferred tax that emanates from this slide here, these two here, right? Okay. Now, the last thing that we are supposed to do is to put a note in terms of this, which is the low value asset lease expense, which is 11.5, which is the standard, and the maturity analysis of future lease payment 13.8 in 2021. That's how much you'll actually pay, and in 2022 6,900. Those are actual payments. You can even read them from this column here, right? How they're going to follow each other in terms of that. Okay, now this is an exercise that I've given you to practice in terms of this one. Now here we are saying you've got figures here including VAT in bracket and it's non-qualifying. Then we are saying, can you basically try and do this using the same requirements as basically the ones that we've given you above. All right, thank you.